Good afternoon, everybody. First things first, we did have a recommendation in crude oil hit today. We were looking to buy October crude oil at 72.65. The low today was 72.63. So far, so good. If this market ends up closing somewhere near where it was when we took a snapshot of the chart shortly before coming into the meeting, then we would have a doji on the chart, and that typically shows a rejection of this lower trade. And the next thing that we're going to look for is a retest of this this area here, which is the 38% retracement right at about 75.58. We also have a recommendation to buy crude oil on a stop above these highs. So if we last week on Friday we did fail again near these highs, if we end up taking that out after holding again the uptrend on this continuous chart, and this is something we talked about a week ago and 2 weeks ago, is potentially why the crude oil just stopped on a dime when it was pointed lower and turned around. We are looking at the uptrend on the continuous chart, which suggests that this market still may have enough push to get towards this downtrend, which would be near $80 a barrel. And I think that's going to be your next stop if we take out these highs here from last week. Now, the dollar index may or may not have some sway over that. So far, you go back over the past couple years, and crude oil and the dollar have been a very highly correlated trade, in that they're inversely coordinated, or inversely. Now at this point, the relationship between crude oil and the dollar hasn't held as much sway, and really the dollar index hasn't held as much sway over a lot of things. Granted, the grain market's a very good example of that, but what we're watching in the dollar right now is these two major moving averages. This is going to be your 50-day and your 20-day. And by the way, this is the September dollar. If you're going to be trading, you should be trading the December, but this chart has a lot more history behind it, so that's why we're going to use this as your basic, just looking for overall chart patterns. But if we can get a couple solid closes above these moving averages, we're probably going to go back up and retest what is 38% retracement on the dollar chart. If we can take out these highs, then that's going to be dollar bullish. Conversely, if we have a hard time and we continue to stall out in this area and take out lows from last Friday, which would also be the 200-day moving average right here, we're looking for a potential head and shoulder top that would actually project back down to these lows. And so we're kind of waiting for the next hat to drop on this dollar. The news today was of renewed concerns about the European financial market and their banking sector. And last time we had these concerns, there was a lot of liquidation in the market in general, and that's what drove this move here. It's so hard to tell with what's going on in Europe. This is just going to be a 1 or 2 day ordeal, or if this is going to be something that escalates into a bigger story. And as far as that goes, we're just going to watch the chart for direction. And in the same token here for crude oil, it's going to be hard for crude oil to get much going here if this is a bigger story. But right now we've got some short-term stuff with a refinery explosion in Mexico that is lending some support. So we're going to continue to watch the support for chart for direction and see where we